Hi, Assalamualaikum. I'm Aisha. So today we are going to present financial statement analysis between Sime Darby Berhad and FGB Holding Berhad. So our group consists 5 members, which is me, myself, Siti Aisha binti Omar, Nur Elida binti Abu Hussein, Farah Hanani binti Azilan, Anis Yasmin binti Afandi, and Subail Manzoor. So in this presentation, we are going to talk about introductions, horizontal analysis, vertical analysis, and last but not least is conclusion. So without further ado, I pass to the first presenter.
Hi, Assalamualaikum. My name is Nur Elida binti Abu Hussein and I am from Group A in Tutorial 2. We have been assigned with the Financial Statement Analysis Report and now we are going to present on this particular company. Basically, we have chosen two companies, which is Sime Darby Plantation Berhad and FGB Holdings Berhad. And the main one would be Sime Darby Plantation Berhad for us. Without wasting any time, let's go to introduction part first. Okay, Sime Darby Berhad, known as the best sector when it comes to plantations, is one of the large firms that is successfully listed on the Bursa Malaysia and is completely based on the government company of Malaysia. It was founded in 1821 and they have continued to become larger and better throughout time. This company, which has operation in 19 different countries, is a chosen partner for some of the world's most famous companies in the industrial and motor sector. With a strong presence in the Asia Pacific, they employ approximately 20,000 people and consist of 4 core business, which are industrial, motors, logistics, healthcare, and other business, especially plantation, allowing them to be one brand that can join numerous industries while also collecting multiple awards at the same time. Next, Sime Darby Plantation Berhad has a presence in over 100 countries and is a leader in innovation. And the reason behind their presence is actually they employ the 3 pillars, that is sustainability, innovation, and people, which later lead them to produce olive cooking oil, Elais red palm fruit oil, Natrio, and Citrio. Subsequently, there is the Proper Award 2021, Number 1 Brand Award 2020, and Asian Energy Award 2020. That is all for Sime Darby Berhad, and for FGB Holdings Berhad, we shall move to the next slide. Felda Global Ventures Holding Berhad is founded by Tun Abu Raza in July 1956, which later Felda is changed to FGV Holdings Berhad in 2007. As Sime Darby is involved in various sectors, FGV is most likely involved in plantation only. What did they do? FGV is more concentrates on the supply chain of palm oil, rubber planting products, sugar manufacture, and downstream activities in oils and fats and oleochemicals as one of the country's leading globally integrated, diversified agribusiness. Not just that, but FGV now has a market presence in over 10 countries across Asia, the Middle East, North America, and Europe. Furthermore, FGV has 439,725 hectares of land in Malaysia and Indonesia. To add, FGV now employs over 45,000 people, including field employees. And this most successful product produced by this company is Saji, Seri Pelani, and Adela cooking oil, where Malaysians love it so much. And that is all for introduction part. And for the next part, I shall pass to the next presenter.
Hi, this is Subail Manzoor from Kashmir, BBM Marketing. Today we're going to talk about horizontal analysis. Horizontal analysis when it comes to a company named Sime Darby. So basically, what is horizontal analysis? Horizontal analysis are basically analysis that take us to the historical data that let us measure or give us an idea of the historical data through which we can compare the performances of the business. So here we're going to, when it comes to ratios, when it comes to line items or recording in different periods of accounting. So when it comes to Sime Darby company, we will look at year 2020 and year 2021. First and foremost comes liquidity. So what is liquidity? Liquidity simply means the liquidity or facility assets simply mean that you have an asset that you can exchange in near future or whenever in future into cash without affecting its price or its cost. So you can exchange it. So that means that gives us an indication of how much a company holds its assets. So when we look at it in 2000 and comparing it in 2020 and 21, we see that in 2021 Sime Darby company has had more liquidity. So for example, we calculate it like this: if for example a company, Sime Darby, talking about Sime Darby since we're talking about it, the ratio less than 1 will indicate that the company is not going to hold up and is preferably or is vulnerable when it comes to dissolving, or when it comes to not coping up with their firm, how they are. So when we look at 2020, the solvency ratio was less, and it was, in the both cases, it was more than 1. But in 2021 it was more than how it was in 2020. With that said, another thing that I need to mention here is that ratio more than 1.50 in liquidity, ratio more than 1.50 indicates that the company is more solvent and the company is more liquid. Giving your example, cash is the more liquid, whereas other tangible assets, tangible goods, tangible assets are less liquid. So this is how we calculate, and by our calculation we get to know that in 2021 Sime Darby company has had more liquidity. That means they were more capable of, there was more solvency. They could pay their bills, liabilities through the liquidity that they had, whereas in comparison to 2020. Moving on to our next topic, it's profitability ratios. So profitability ratios are financial indicators that are used to evaluate a company's ability, company's capability to generate revenue versus its sales, its expenses, its balance sheets, and or shareholders equity over time. But this all of this data is utilized from a single point in time. It's so that it gives us a complete check what we are analyzing or what we are evaluating. So as we know that we're comparing the analysis of Sime Darby's to 2020 and 2021. So first and foremost, we go to the 2020 part of it, when they had generated 2 cents worth every dollar, and in 2021 Sime Darby company has managed to make a profit of 3 cents per dollar. That is like very easy to calculate and evaluate that in 2021 Sime Darby has had an upper hand over their previous year. That means their performance was good. The profit margin has improved in 2021, we can say. And coming back to another subtopic, that is asset turnover ratio. That is, it has increased and it is higher than in 2020, as we have calculated and as we have suggested in the documents, that how the financial ratio basically of Sime Darby company has had an ups and downs, but that is how we compare the years of or the financial performances, as I already said before, as I already portrayed it in the first thing, that we're going to compare the historical data. horizontal analysis. We're doing these are the subtopics of horizontal analysis. So as we see that it's in 2021, it's not only increasing in the liquidity ratios or any other aspects of it, but the profit margin has also gone higher in 2021 as compared to 2020. So based on our calculation, we show that Sime Darby's solvency ratio is lower than 1. That is, it shows that it is the greater portion of Sime Darby's is held by, or is the assets are funded by equity, with in terms to the company's financial performances in both the years. It is clear that the company, the assets of the company has been funded by the equity.
Hi, I'm Aisha. Vertical analysis is a method of analyzing financial statement in which in line item is given as a percentage of the statement-based number. Thus, income statement line item may be stated as a percentage of gross sales, balance sheet line item as a percentage of total assets or liabilities, and cash flow statement vertical analysis expose each cash flow inflow or outflow as percentage of total cash inflow. Okay, for the first one, FGV Holding Berhad total liabilities in 2021 is higher than Sime Darby, which is 60%, while Sime Darby is 43% in 2021. But for both of company, their liabilities are lower than asset. It indicates that it's a good sign. It means each company has equity. As the asset increase, the equity increase. Likewise, if you have a decrease in asset or an increase in liabilities, the equity decrease. Moreover, total equity for Sime Darby in 2021 is greater than FGB Holding Berhad, which is 57%, while FGB is 40%. FGB Holding Berhad gross profit for 2021 is higher than Sime Darby, which is 14%, while Sime Darby is only 5%. In 2021, it showed that Sime Darby, the cost of the raw materials and goods has increased and is not in the line with the increase in sales. Profit of financial position in 2021 for FGV Holding Berhad is greater than Sime Darby, which is 6%, while Sime Darby is 3% only. That's all from me. I will pass to the next presenter.
Hi, I'm Anastasia Yasmin from BBA HRM. In short, both of company, which is Sime Darby and FGV Holdings, developing in the plantation sector. The financial ratio has analyzed the company financial situation such as liquidity, profitability, cash flow, but in the 2020, the financial plans asset is increased to 17,956,394, while Sime Darby is decreased to 28,487, which has happened because of poor acquisitions. In the year of 2021, the FGV Holdings revenue has increased by 19,565,891, and while Sime Darby just 44,483. This happened because of the increase and decrease in company sales. The revenue growth shows percentage depicts the increase and decrease specifying business trends. That's all from me. Thank you.
Assalamualaikum. My name is Farah Hanini binti Azilan and I'm from BBA HRM. My ID number is AIU 22032019. Horizontal analysis and liquidity from both companies have shown a difference between analysis in 2020 and 2021. As has been recorded, the analysis of the current ratio in 2021 is higher than 2020, whereas ratios of 1.50 or above would normally show enough liquidity. On the other hand, profitability ratios such as profit margin, asset turnover, and return on equity for Sime Darby Berhad is 2021 are greater than the previous year, which is in 2020. This situation shows the effectiveness and how well Sime Darby creates profit and value for its shareholders. Higher ratio outcomes are typically more beneficial, but when compared to the results of similar firms, the company's own previous performance, or the industry average, these ratios reveal considerably more information. Despite the fact that Sime Darby Berhad's profitability is at risk, they still manage to have higher profit margins than their rivals. This is because they want to provide their clients with the assurance of a well-organized and efficient supply chain. It proves that the company cares about its consumers in need as well as the company's reputation. The last one is the solvency ratio, which both years happen to be lower than 1. A higher share of Sime Darby's asset is said to be supported through equity. A solvency ratio of less than 20% or 30% is recorded as financially healthy. The lower a company solvency, the more likely it is for it to fail on its debt commitments.
Okay, that's all from us. Thank you for listening.